Hey everyone, welcome back to another portfolio update video on the channel. Portfolio is currently sitting at $8,383.02. For the day, we are down 78.03 or 0.92%, down 578 after hours. For the week, we are down 39.94 or 0.47%. For the month, we are down 194.58 or 2.27%. For the 3 months, we are up 456.90 or 5.76%. For the year to date, which kind of hurts, we are down 355.82 or 4.07%. And for the 1 year, aka the all-time chart, we are up 337.58 or 4.2%. So yeah, guys, we are still above these previous peaks, so things are looking really good. And let's just go over the positions. So first of all, I have a Riot 10 strike put I'm planning to open tomorrow, which will expire this week. Next up, I have the MPW call credit spread, which is at full profit currently. You can see I'm on total return. Next, we have the Sofi 650 puts, which I'm currently at 50% on. We have a TSLL 1223 short covered call. So let me go over this real quick. So we have the 1223 strike covered call, which you can see I collected $55 in premium for, which is crazy. And this expires in 2 short weeks, so $55 in 2 weeks is pretty great. But yeah, so I had a short put on TSLL from last week that expired in the money, or I guess it didn't necessarily expire because I ended up closing it out for no extrinsic value on Friday, and I ended up buying the shares outright. That way I could turn around and sell a covered call for this long weekend, which is what this is. This is the covered call I sold. This is at my original cost basis that I got quote unquote assigned on. And I was able to collect 55 whole dollars instantly for just 2 weeks of tying this up, which is great. So yeah, and along with this, I'm trying to think of my assets as rental units like houses, like real estate. And you can see I made a new spreadsheet here called rentals, where I'm basically keeping track of all the option income I'm bringing in on each ticker symbol, which is great. So I'm really trying to not focus on the share price of the underlying asset. I'm really just trying to focus on this income that I'm bringing through the door, which you can see I'm doing here. So the only rule is I'm trying to sell at or above my original assigned cost basis when it comes to covered calls. But I'm just trying to disassociate from the actual price of the underlying stock as a way of not worrying about it as much, because I tend to, when I'm focusing too much on the share price, I'll end up selling covered calls below my cost basis, then I get assigned all of a sudden, and now I'm at a capital loss where I lose money, right? So I'm just trying to ignore the share price and simply focus on the rental income I'm bringing in. So as soon as I sell any kind of option, I immediately add it to that ticker symbols list. So I sold this covered call, even though it hasn't expired, I've collected $55 of cash in my account. So I'm counting that here as $55 made, because whether this expires in the money or out of the money, it doesn't matter to me. I could get the shares called away and boom, $55, or I could have it expire worthless and then I can just collect another $55 at the same strike price the next week. So that is the way I'm thinking about options income. You can see I've been wheeling TSLL since the 2nd of January, and I've already brought in $67, which is more than Sofi, which I've been wheeling since November. Because I made a lot of mistakes trying to wheel this stock, which I'm employing those mistakes and lessons learned on these 2 new stocks, because I think I'll be able to do much better, and I have been doing much better on Sofi ever since I sort of took those lessons into account. As you can see here, I've been making a lot of income since middle of December. But yeah, so I'm trying to have this sort of rental house mindset when it comes to my stocks and selling options on them. So that's what all this is. But back to the portfolio here. So we do now own 100 shares of TSLL. But yeah, let's keep going. We have the Sofi $11 call, which is currently up $3 on. CVE call credit spread currently up over 50% on, which is great. This one had caused some hurt in the past, but finally it's starting to lose a lot of its value as we approach expiration in the next month. Originally opened this for, I believe, like, what is it, $17 a credit. So far we are up over 50% on that. Next up, we have the Sofi $6 put sold for March 15th of 2024, which we are down $8 on, but it's at the $6 strike. So I'd be more than happy to pick up another 100 shares at $6 or have this expire totally worthless. So this is a great play. Down currently because of the recent pullback in Sofi, but I think it's a really good play to have. Moving on down, we have the Sofi 11-12 call debit spread, which is down really bad. Still has $8 of premium left in it. I'm still thinking we're going to get a run-up from earnings on Sofi, so I'm thinking we could have some sort of pop in this contract before I sell it off. Of course, I don't expect to make to break even or anything like that, but I think it could be a good time to sell it off. And at this point, it's worth $8, so I may as well just hold on to it. But yeah, moving on down, I trimmed some of my positions a little bit. SPLG is at a new all-time high. So I trimmed about $700 because I ended up having to withdraw some money out of this portfolio. And also with this recent pullback, my portfolio value has dropped by about $300. And like I said, I still need to deploy, or I haven't mentioned this yet, but I have about $300 I'm going to deploy into this account this week, meaning our balance will be around $8,700. But originally this was at around 9.2K, so I had to trim about $700 off of this position. And it is at an all-time high, so it wasn't a problem for me to trim this. I also trimmed a little bit of Sofi to keep it under that $1,000 mark so that these shares would be owned for free on margin, no margin interest. Of course, we have the TSLL, but as long as I can pull in that $50 every 2 weeks, that crazy options premium, then there's no worry about holding this on margin. And I also trimmed my XXX position a little bit, just to deleverage a little bit at these all-time highs. Next up, we have the reoccurring buys. This is $50 a week total, a little bit every single day, and then once a week for the quadruple leveraged S&P 500 ETF. What else we got? One thing I would like to say is this gigantic pullback is entirely a Sofi thing. If I go to Sofi, and also on total return, if I go to Sofi, it says only $40, but we do have that huge amount of options income, $58 on top of that. Not to mention our cost basis is 50 cents lower, if you remember, because we got assigned on that put credit spread, which kind of messed up my cost basis to an unrealistic mark. So it's about $7 in actuality. Not to mention we have this income. So our cost basis is probably sitting around $675 still. So we're up a lot more than this currently, over probably $120, $130, something like that. But yeah, I trimmed this a little bit back, and now I can't remember why I clicked in here, to be honest. But they are set to announce earnings on the 29th of January, where they should be, for the first time, profitable for their first quarter, or at least non-negative. So if they're able to get that, or even if they get 1 cent on the board, if they somehow smash it out and get 1 cent, that would be amazing. I think Sofi stock will boom if that's the case. We'll have to see. Obviously, I'm hoping for it, considering I'm holding quite a lot of Sofi stuff. But yeah, so yeah, I don't remember why I clicked on here though. I'm not gonna lie, I don't remember why I clicked onto Sofi. But yeah, what else is there to really mention? I'm trying to think here. I guess just, I'm expanding into some more risky wheeling stocks that I want to wheel on margin, which I know sounds like a red flag, but the idea is that I'm selling weekly cash secured puts at a very conservative strike. That would be a good strike for a long-term hold in the worst case. And then I'm looking to turn around and sell covered calls right at my cost basis, at the money, in the money, whatever my cost basis is on the stock at the time, to collect some giant premiums like I am on TSLL, because I just think it's just going to be a great thing going forward, considering I'm still getting the full S&P 500 growth without any constraints. No more covered calls on SPLG. I did it again and ended up closing it for a loss. It's kind of like a lesson I have to learn every single month, it feels like. But seriously, this time, no more covered calls on SPLG. And also, one more thing, no more spreads. I'm not doing spreads anymore because I don't think a spread has ever worked out in this account except for this this credit spread. That's at least what it feels like. I feel like spreads have never worked out in my account, which is kind of funny. But yeah, aside from that, yeah, no spreads, no covered calls in SPLG anymore, so we get that full growth, and thinking of our assets as rental houses. So that's all the new stuff I'd say for this week. Hopefully you enjoyed watching this video, and we'll see how it goes this coming week. Tune in next week to see how the portfolio does, because I hope to see you in that next video. But thank you for watching. Goodbye.